Hello, welcome to this webinar, Taxes and Financial Incentives for Farm-Scale Biodiesel Production. This hour-long webinar is presented by the National Center for Appropriate Technology, NCAT, and the National Agriculture Law Center. My name is Leif Kinberg. I'm a farm energy specialist for one of NCAT's major programs, the National Sustainable Agriculture Information Service, also called ATTRA. Today's webinar is the third in a three-part series of webinars on farm-scale biodiesel production. Taxes and financial incentives for farm-scale biodiesel will help viewers learn about federal and state fuel excise taxes that apply to biodiesel. You will also learn about excise tax refunds for off-road use and exemptions and incentives that apply to farm-scale biodiesel production. Lastly, webinar viewers will learn about record keeping and resources that are helpful in properly paying fuel excise taxes or qualifying for refunds or incentives. During this hour-long webinar, you'll be able to type in questions in the box on the left-hand side of your computer screen. We'll review these questions during the hour and then try to get through as many as possible during a Q&A session with our three presenters at the end of this webinar. Also immediately following this webinar, please take a minute to complete the survey and tell us what you thought of today's presentation. NCAT, a nonprofit organization with offices across the United States, has managed ATTRA for more than 20 years, with funding provided by the United States Department of Agriculture. We provide extensive information on how to farm more sustainably, including information on crops, livestock, organic certification, farm energy, and many other topics. You can visit our ATTRA website at www.attra.ncat.org. We are grateful to the USDA's Rural Business Cooperative Service for financial support for these webinars. The National Agriculture Law Center is the nation's leading national and international resource for agricultural and food law research and information. It is a federally funded, nonpartisan research and information center staffed by a team of law and research professors, attorneys, and other specialists located at the University of Arkansas. It is the only agricultural law research and information facility that is independent, national in scope, and directly connected to the National Agriculture Information Network. The National Agriculture Law Center's website, www.nationalaglawcenter.org, provides access to center publications and serves as a gateway to agricultural law resources on the internet. If you miss anything during the webinar today, keep in mind that the entire presentation will be archived on the ATTRA website at www.attra.ncat.org. So you will always be able to watch and listen to the webinar at a future date. The presenters for this webinar will be Al Kurki, a biodiesel specialist with the National Center for Appropriate Technology, Shannon Mirus, staff attorney with the National Agriculture Law Center, and Rusty Rumley, staff attorney with the National Agriculture Law Center. Al Kurki is coordinator of the Oilseeds for Fuel, Feed, and Future project for NCAT in Montana. He's worked on farm energy issues for over 10 years. He's one of several NCAT program specialists who answer farm energy questions posed by farmers, ranchers, and others who call the ATTRA toll-free line. Kurki is former executive director of the Alternative Energy Resources Organization and has worked on sustainable agriculture issues for more than 23 years. Shannon Mirus is a staff attorney at the National Agriculture Law Center in Fayetteville, Arkansas. Shannon coordinates legal education outreach efforts through the Cooperative Extension Service and directed the National Agriculture Law Center's recent project to collect state and federal biofuels laws. Shannon's primary research areas include agritourism, landowner liability, risk management, and renewable fuels. She is licensed to practice law in Arkansas and holds a Master's of Law degree in agricultural law. Rusty Rumley is a staff attorney at the National Agriculture Law Center located in Fayetteville, Arkansas. His primary areas of interest are forestry, estate planning, taxation, business organizations, landowner liability, and alternative dispute resolution. And he is a frequent lecturer on agricultural law topics to various groups. He is licensed to practice law in the state of Oklahoma after earning his BS in agribusiness from Oklahoma State University and his JD from the University of Oklahoma, and his LLM in agricultural law from the University of Arkansas. With that, Al, I'd like to turn it over to you to kick off today's webinar.
Thanks, Leif. Given how much ground we have to cover on today's topics, we're not going to spend much time on biodiesel production and use issues. NCAT produced 2 biodiesel webinars that you can see at the ATTRA website. So if you're new to biodiesel, please view those webinars for a lot more detail on how to make, store, and use biodiesel safely and effectively. And we're not going to be providing tax advice in this webinar. Contact your accountant or another qualified tax consultant for details concerning your specific plans and circumstances. This webinar is a snapshot of current laws and incentives. As you'll hear shortly, many things change, but we hope that by the end of this webinar you have a basic understanding of federal and state taxes and incentives and some common sense tips on record keeping and finding accurate information. Here's the topics we'll be covering in the next 45 minutes or so, and then we'll answer what questions we have time for. In the next couple of slides, I'm going to define just a few terms so we're all starting at a common spot. Biodiesel is permanently thinned vegetable oil. Biodiesel has been used by over-the-road truckers as a fuel additive because of its excellent lubricity qualities. More recently, it's become a replacement for petrodiesel. You'll hear references to phrase in this presentation like B100 and B20. B100 is 100% straight biodiesel. B20 is 20% biodiesel, 80% petrodiesel, and so on. Biodiesel should not be confused with straight vegetable oil, e-diesel, ethanol, or any mixture of straight vegetable oil, gasoline, or alcohol. The chemistry of biodiesel is simple enough. 10 pounds of almost any animal fat or vegetable oil combined with methyl or ethyl alcohol and a catalyst will render about 10 pounds of biodiesel and a pound of a glycerin byproduct. There are many types and scales of processors, like the small-scale processors pictured here to the big multi-million gallon per year manufacturers. Variations in the chemistry and the processing technology are still aimed at producing high-quality biodiesel. And the quality standard biodiesel is supposed to meet is outlined in this next slide. The National Biodiesel Board definition of biodiesel is, and I quote, the monoalkyl esters of long-chain fatty acids that are derived from animal fats or vegetable oil and that meet or exceed the specifications of ASTM D6751 or any legal successor thereto. To meet this standard, there are about 20 properties that one must test for, including the examples listed here: flash point, cetane, glycerin levels, and so on. This American Society of Testing and Materials standard and the definition are embraced by all states and the federal government when they set policy on biodiesel production and use. So with that as background, I'd like to turn the microphone over to Rusty Rumley, who will outline federal taxes and incentives that are relevant to farm and ranch scale biodiesel production and use. Rusty?
Thanks, Al. As Al said, my name's Rusty Rumley. I'm here today from the National Agricultural Law Center. The 2 topics I'm going to stick on are the federal excise taxes for biodiesel and traditional diesel, as well as some of the incentives that are available for biodiesel producers. So starting off, federal taxes on the federal taxes are actually owed by both your large-scale and your small-scale biodiesel producers, unless there's an exception otherwise. We'll be going into those exceptions a little bit later in my presentation. These excise taxes, they're not geared towards one group or another, neither small nor large, nor are they aimed at biofuels in particular. These federal excise taxes are actually owed by both traditional and biodiesel producers. However, what you're going to see when dealing with these biodiesel incentives and taxes is, more with the incentives than taxes, is that they're typically geared towards your larger scale producers, not so much from the tax angle, but from some of the requirements you're going to see put forth by EPA and other federal agencies. So your federal excise tax is the first point I was going to make. Standard excise tax on traditional diesel is 24.4 cents per gallon. Dyed diesel is not subject to this tax if you're familiar with that. So what is an excise tax? In some ways, your excise tax is very similar to that of a sales tax that you would pay in a grocery store. It's a tax on a particular good or service. However, unlike a sales tax, it's typically not taxed in as a percentage of a good. So when you go to a grocery store, you'll purchase 40 to 50 different items. At the end, the cashier will ring you up and then charge you the tax rate for that county and state combined. So 7%, 10%, 12%. An excise tax is a little bit different. An excise tax is a tax that's specifically aimed at one good or service, and typically that tax is not expressed as a percentage, but it's set at a set rate per unit. So with your biodiesel and traditional diesel, the 24.4 cents per gallon. Now, as I said earlier, the tax on biodiesel is the exact same. The general rule of thumb that you're going to hear me as well as the other presenters today talk to you about is that unless there is a specific exception stating otherwise in either the federal or the state statutes, biodiesel is treated the same as your traditional brewed petrodiesels. So moving on, we're going to talk, I'm also going to talk a little bit about the exceptions. I've told you a bit about the excise taxes that we have to pay on both traditional diesel as well as biodiesel, but there are some exceptions that you can use to get around paying this tax and are probably some of the most important for farm-based users. There's numerous examples the IRS gives of situations where you do not owe excise taxes for the use of particular biodiesels or traditional diesels. For the purpose of today, I'm just going to talk about two. These are by far and away the most important for agriculture. The first one is on a farm for farming purposes. Now, typically when you look at IRS regulations, they're difficult to understand, but this is one of these situations where what you see is what you get. If you look at the exact definition, on a farm for farming purposes. So that right there tells you you must be using it for an agricultural purpose, and that agricultural purpose must be on the farm. What gets a lot of farmers into trouble is off the farm use. So even if you use your biodiesel or traditional diesel to transport livestock, feed, crops, or equipment off farm, such as hauling wheat to an elevator or taking cattle to the market, these uses do not qualify as being a non-taxable use for the diesel. Other exceptions where the on a farm for farming purposes will not be allowed is personal uses such as mowing the lawn, or if you use the biodiesel or traditional diesel in any operations such as processing, packaging, freezing, or canning of operations, depending upon what kind of produce you raise on your farm. The other thing I was going to mention is the other main exception that you'll see is the off-highway business use. Basically, this use is the same as that for on a farm. The general rule of thumb that people need to realize is look at the vehicle you're putting diesel in. If that vehicle needs to be tagged before it can operate on a state or federal road, then you are most likely will not be able to run biodiesel or traditional diesel that is untaxed. So here's some examples of the off-highway business use. It works the same with the on-farm for a farming use. This is given to us by the IRS. So Caroline owns a landscaping business. She uses power lawn mowers and chainsaws in the business. The gasoline used in the power lawn mowers and chainsaws obviously qualifies as fuel used in an off-highway business use. So what about the fuel used in the truck to haul around the power lawn mowers to her various customers? Fairly straightforward. The IRS says, are you using this on an off-highway business use? In this case, she's using the trucks on the highways to move from customer to customer. Therefore, she will not be allowed to use tax-exempt fuel in her trucks to haul around the mowers. So what about fuel used to mow her personal lawn? Once again, fairly straightforward. It's off-highway for a business use. In this case, the lawn mowers is an off-highway use. Unfortunately, this is an off-highway personal use. Therefore, she's still going to owe the taxes on the biofuels or traditional fuels. So what are the consequences? I've stated before that you can get into trouble by using tax-exempt biodiesels or traditional diesels and improper uses. What the IRS collects from you in case you do violate these provisions is called the backup tax. And this is as of April 8, 2010. This tax has been set for quite some time, but with tax regulations, you never know when it could be updated. Basically, either the vehicle operator or the fuel seller or whoever pumps it into the vehicle can be liable for this tax so long as they know or had reason to know that the fuel you're going to be using is going to be used for a non-taxable use. The tax is the 24.4 cents a gallon, which is the same as the original tax in the beginning. So the question is, why would you want to pay it? Here's an example that I've witnessed personally. This was with dyed diesel for semi-trucks, but as I stated earlier, it really doesn't matter whether it's for traditional petrodiesel or if it's for biodiesel unless there's a statute or a regulation on point stating otherwise. So for this example, say you've got a diesel semi-truck that's got 200,000 miles on it, and that truck roughly gets 10 miles to the gallon. The IRS catches you using biodiesel in that truck that you have not paid the excise taxes on. What the IRS could say is that you've burned 20,000 gallons of diesel in the truck, which is your 200,000 miles divided by 10 miles per gallon, and then excess backup tax for all 20,000 gallons unless you can prove otherwise. So if you go ahead and do the math and figure 20,000 gallons times the 24.4 cents per gallon, you end up with a tax or a backup tax of $4,880 on just this one truck. Now, what if you have more than one diesel vehicle? Chances are, if you're brewing biodiesel on your farm or ranch, you're going to have more than one vehicle that can use this biodiesel. Depending upon the accuracy of your records, the IRS could potentially come back and count up how many vehicles you have that burn biodiesel and try to assess the backup tax on all those vehicles. Once again, all of this depends upon the accuracy of your records that you're keeping. We've talked a little bit about the consequences of not paying the excise tax and when the excise tax is owed. The next thing the next topic I'm going to move on to is the federal tax credits that you may be entitled to for producing and using biodiesel. The first thing I need to say is today's date is April 8th, 2010. As of today, Congress has not re-upped the tax credits for biodiesel. These tax credits expired December 31st, 2009. There has been bills in front of Congress to extend these tax credits throughout the 2010 year. So far, none of these have made it through yet to be signed into law. What I'm giving you today is what the tax credits were as of last year and what is predicted to be the tax credits once they move through Congress. Basically, there's 3 tax credits that I'm going to talk about today. The first one is your straight tax credits. It's $1 per gallon of biodiesel that's brewed. Fairly simple and straightforward. The second tax credit that's available to brewers or available for biodiesel purposes is called the mixture credits. These are also available at $1 per gallon of biodiesel that's blended with traditional petrodiesel. The last tax credit that I'm going to address today is the tax credit that's available for small agri-biodiesel producers, which as of last year was 10 cents per gallon up to 15 million gallons of production. There is one caveat on that small agri-biodiesel producer tax credit, and that falls under something called the aggregation of gallons. As I previously told you, you are able to collect on this small agri-biodiesel producer tax credit up to the first 15 million gallons of production, which gives you a basic tax credit of 1.5 million if you can capture the whole thing. There is a limit, and that is this is only available to small agri-biodiesel producers. The cap for being considered a small agri-biodiesel producer is 60 million gallons of production capacity. Why this is important is, for one, you may realize most farmers are not going to come anywhere close to meeting the 60 million gallon limit on their particular operation. The aggregation doctrine, though, makes it a little bit dangerous at times. You need to be aware of what organizations you're involved with that may also produce biodiesel. Aggregation basically says add up not only the amount of biodiesel that you're producing, but also look at the organizations or businesses that you are a part of that also produce biodiesel. All of those, when combined, do you exceed those limits? If you're a member of a cooperative that produces biodiesel, or if you are a shareholder in a company, you need to look at this a little bit more closely to ensure that you're not exceeding the limits on what is allowed for this particular tax credit. The last thing I'm going to talk about is the size of the operation, why it matters, small versus large. The way the tax credits are currently drafted, they're not geared towards the small producers or the large producers, but the federal government is in charge of national policy, so most of the regulations and incentives are typically geared towards your larger producers. You need to realize that when you are applying for these tax credits. These things can take a little bit of time. The government moves slow. Requirements for some of your larger scale producers of biodiesel, there are heightened requirements from EPA and other government agencies. You need to be aware of this stuff, and you need to talk to either a qualified attorney in your area, or you need to talk to the excise tax agent that is in charge of biodiesels for the state you're located in, and they will be able to assist you more on this particular area. So with that being done, I will turn this back over to Al and let him tell you about some of the forms you're going to need to fill out for biodiesel tax credits.
Thanks, Rusty. I have just a few more points to follow on Rusty's comments on the federal excise tax. Federal excise tax is owed when the biodiesel is pumped into a vehicle used over the road. The first gallon used on road is taxable. There's no minimum production or use thresholds. You got to count from gallon one. And since blending petrodiesel and biodiesel is a bit more complicated in its relationship to taxes, I'd just like to talk a little bit more about that in the next slide. If you are not a commercial fuel blender, that is, you're not in the business of blending petrodiesel and biodiesel, federal excise tax does not have to be paid on biodiesel that is blended on farm, provided you do not blend more than 400 gallons of biodiesel every 3 months. When you exceed that level, you have to pay tax on the gallons of biodiesel you blended into the petrodiesel. Blending for on-farm use needn't be an issue at all. For example, if you were to choose to burn B20, that's 20% biodiesel year-round, you could blend up to 400 gallons of biodiesel with up to 1,600 gallons of petrodiesel every quarter. That's 8,000 gallons of fuel per year. And blending thresholds become even less of an issue if one uses B100 on a seasonal basis, like using B100 in the summer months and straight petrodiesel in the winter months, for example. On the next slide, you're going to see some of the paperwork, and you knew it was coming. Form 720 is the first one. A farmer or rancher who uses homebrewed biodiesel on the road completes line 79 of Form 720 and pays the tax. Paperwork and the tax go in every quarter. There's another form in back of this one that you see on the screen called Form 8849. There's really no need to use this form if you buy bulk untaxed fuel for on-farm use, whether it's petrodiesel or biodiesel. However, if a farmer or rancher bought fully taxed biodiesel at a retail outlet and then used that biodiesel on farm for farming purposes, they could apply for a road tax refund by completing Part 3 of this Form 8849. On the next slide, probably last but certainly not least, one more piece of paperwork. If you sell, trade, or otherwise distribute biodiesel to the public, you need to complete this form. While filling out Form 637 is fairly straightforward, the cost of getting the ASTM 6751 certification and the EPA registration that go with this federal letter of business activity is pretty expensive. The costs start at $2,500 a year and go up rather quickly from there. This registration and all it implies is industry driven with sound reasons for backing it. That the goal is to make sure that those in the business of producing biodiesel are producing a quality product for the public that's uniform and constant. But the interpretation and implications of Form 637 and the registrations and certifications that go with it could be the sole topic of its own webinar. So I'm just going to close by saying the cost of ASTM certification and EPA registration are probably cost prohibitive for almost all small-scale producers. Next slide just shows where you can get more information or assistance. Toll-free excise tax helpline, the website. If you go to the www.irs.gov website and click on the business tab at the top bar and scroll down to excise taxes for more information, you can find out a lot there. And if you really want to talk to an individual about some of the dirty details, there's at least one IRS fuel excise tax agent in almost every state, not everyone. Okay, so we've talked about the regulations and the paperwork. What I spent some time doing in preparation for this webinar is talking with farmers and ranchers around the country who produce and use biodiesel for on-farm purposes. I asked them what advice they would have for others on producing biodiesel and paying excise taxes, and here's what they said. Have an accurate metered pump, one that you know works really well and that you really trust. Keep good records, a production log of from wherever you produce the biodiesel, and a fuel use log to document what vehicle that fuel went in. This becomes really important if you use any biodiesel on road. One other tip suggested was save your methanol or ethanol receipts as backup, because methanol or ethanol are used in the process, and there's of making biodiesel, and there's a direct relationship. That would serve as a good backstop if there were some gap in your records to show what you had actually produced, and hopefully can tie it to what you used. It's also might not be a bad idea to keep records of veggie oil that you either purchase or produce on farm. I'll close with that for now. Shannon will take us through what the state taxes and incentives are. Shannon?
Thanks, Al. Well, we just heard from Rusty and Al about some approaches to federal biodiesel laws and incentives, and as you might have guessed, states have adopted their own approaches to this sort of thing as well. So it's going to be very important to be familiar with the state in which you live or produce or sell biodiesel for these sorts of things. In general, states have taken two types of approaches for biodiesel. The first would be programs to encourage the use and production of biodiesel, and we're going to go through a few examples of those today. The second is regulation of biodiesel. That might include taxes, storage, transportation, permits, and other types of laws that really regulate the use and how it all works within the state. The important thing to remember is that biodiesel will be treated just like any other fuel unless there's a specific exemption for it. So if you're looking for state laws and you can't find one in your state that is specific to biodiesel, then you'll want to follow the laws as they pertain to regular conventional diesel. That applies for all the aspects that I just mentioned, for storage purposes, for paying your taxes at the state level, transportations, and any other permits, and then also for blending. There might be state laws that apply to that as well. First, we're going to talk about some state tax credits. This would be a type of promotion to encourage production. Lots of states have adopted these. Typically, it's an income tax credit up to a certain amount. That's the approach that Arkansas has taken as one of their promotional activities. It's going to vary from state to state as to how it applies, though, and what you can take that credit for. Often it's for the cost of equipment and facilities or the cost of conversion from traditional production. But almost always there are some constraints. Most of these laws are fairly new, and they do have some things with them that limit it, such as a time limit. You may only be eligible within the first 5 years of operation. There may be production limits, such as it will only apply to the first 500,000 gallons that you produce in a given year. Some states enacted these tax credits only for a limited time, and they will expire in certain years. For example, one state has a tax credit that expires in 2016. And there may also be exceptions where you wouldn't qualify at all for this, such as if you already produced biodiesel, you've already made the conversion, and then the law was enacted, you may not be eligible, since the purpose is to encourage new people to join in. But the basic thing to remember is check with your state on this to see if there is a tax credit that you do qualify for, and if there is something, to make sure you fit within the limitations so that you can take full advantage of it. Next, we'll talk about state tax exemptions. Rather than a tax credit, this is just being exempt from the tax altogether or having to pay a lower tax. A few states have exempted biodiesel and other types of biofuels from certain taxes. Arizona, for example, has created an exemption for alternative fuels from state fuel taxes. In Arkansas, biodiesel is exempt from gross receipt taxes. Also, excise taxes, as Rusty talked about earlier. Florida has a different tax, a different excise tax for biodiesel, and California's, their excise tax, depending on what it is for conventional fuels at that time, it's half of that for alternative fuels. So that's something that you'll have to keep track of, but just know that it's available to you. Other states, again, have adopted a reduced rate, which might be a lower amount per gallon or a lower percentage rate like that used in California. Next, we'll talk about some state grants and incentives. Typically, this is going to be available for capital investments. So if you're thinking about getting started or haven't made a huge investment yet, this may be something you'll want to check into. These are available to almost anybody in the supply or processing chain of biodiesel. So maybe you're a full-fledged manufacturer, maybe you provide feedstock or other inputs, or you distribute it. This is something that you could check into, and it might be available to you. For example, in Mississippi and Tennessee both have a 20-cent per gallon payment that they make to biodiesel producers, just because there aren't many in those states and they want to encourage people to get going. Now those do have limitations, just like the tax credits. There may be a limited amount of funds available, or there might be time limits. One state does it on a per gallon basis, and the most you can collect is $2 million. Again, with the time limits, it's only available through 2012 in some cases, or within 5 years after the law has been acted, or within 5 years of you starting the production. A lot of times these grants were created by the state legislatures to get the industry kick-started, and so you'll really want to keep track with when they expire. That's going to be the big thing on this. There may also be federal grants that you'll want to look for, where you can partner with larger institutions like land-grant universities to take advantage of these sorts of programs. There are also some loan programs that are backed by state agencies. These are really vary from state to state depending on the funding available in the state. Typically, they provide assistance in financing anywhere from 25 to 90% of the cost. Now, that doesn't mean they'll give you 25 to 90% of the cost. That means they'll guarantee the loan for that amount, which can be tremendously helpful in finding credit, especially in the situation that we're facing today. California has one type of program like this. It applies to building new facilities and converting old facilities. For government-backed loans like this, you'll want to get with your lender. They'll know all the details about the paperwork and they'll help you make sure it's properly completed. These programs, again, are administered by the state agency, so you'll have to check with which agency in your state and call them, and they'll be happy to talk to you about it because they want to be sure to get the word out and have people participate, and they'll help you decide whether or not your program qualifies for these loan programs. So that kind of sums up the incentives. Now we're going to talk about a little bit more about the regulation of biodiesel at the state level. You heard Al talk a little bit about the ASTM standards earlier and how this applies to biodiesel and regular diesel. Some states have explicitly included this language in their statutes, making it very clear that these standards apply to biodiesel. Arizona is one of those states that's incorporated that into their biodiesel and bioblend statutes. But remember what I said at the beginning of the state portion. If there's not a law that applies directly to biodiesel, then you follow the typical laws for regular conventional diesel. And this is one of those cases. Just because it doesn't say that biodiesel has to meet the ASTM standard doesn't mean that you're free to do whatever you want. So you'll want to get in touch with your state people about what quality standards there are enforced and be sure and check on that. Next, we'll talk about some special requirements for storage. Many states have special requirements for biodiesel. Colorado is one of those. They have rules developed by the Division of Oil and Public Safety, and there are state permits even required for it. Now, not every state has a program like this, but you will also have to follow federal requirements for storage, and that's going to be regulated by the EPA. This is going to vary depending on what you're storing. It may be 100% biodiesel or a biodiesel blend, and there's a difference between that. Again, check with the EPA and know what is required of you because you certainly don't want to get in trouble with this respect. Biodiesel blends can present the same environmental hazards as traditional fuels, and so we all want to protect the environment and be sure we follow the rules. All right. There may be other aspects at the state level that will apply to you. Some special treatment for alternative fuel vehicles. This isn't in every state, but if you're selling, this is definitely something that you'll want to be aware of because it will impact the demand of biodiesel around the country. States like California and Arizona and even some metropolitan counties and cities have adopted these types of special requirements or special permissions for alternative fuel vehicles. They allow lower registration fees or special parking privileges. You can drive with only one person in the high occupancy vehicle lane. Again, they can't mandate that everybody buy alternative fuel vehicles, but they can provide these little bits of incentives to help encourage that sort of thing. So this is really good to keep in mind if you're selling or if you're using it as well, know what's available so you can take full advantage of all sorts of those things in your area. Now we've moved quickly through some of the different types of programs that are available, but the important thing to remember is that each state is different. We've done the research and we know that every state has laws that apply to biodiesel. And so you'll want to check with the agencies in your state to learn about which ones regulate biodiesel. You're going to want to find out what types of programs are available also. And this is going to be especially important if you transport or sell biodiesel in other states and take it across state lines. So you may have to contact more than one state. Another thing to stay on top of is whether or not the programs are still available. A lot of these programs were created before the financial crisis and maybe that funding has since been cut, so you'll want to check into whether you still qualify or how you can take advantage of it. This has just been a quick overview, but if you need more information, you can check out some of the resources we have listed at the end. And with that, I'd like to turn it back over to Al.
Thanks, Shannon. I think Shannon's shown that there's a great variability in the state level exemptions and incentives for biodiesel production and use. And how states collect taxes and pay refunds varies widely as well. One of the best sources of information is the Federation of Tax Administrators website. You click on the links to get to the state motor fuel tax page. And once you get there, you'll get this blue page, which is a grid of all the states. You click on the state for which you want fuel excise tax information. Each state site is different. Very few have contact person listed, but almost all of them have a phone number if you want to talk to someone. All of the sites have the tax rates, forms, frequently asked questions, and in some instances how to file online. In some states you can even pay your excise tax online. Here's some more advice to farmers and ranchers from biodiesel producing farmers and ranchers. Actually, one rancher who I interviewed best summarized what all the folks I spoke with really said. In talking with state officials, try to form a positive relationship. Be clear on what you want, admit your ignorance. You don't have to do their job for them when you first talk to them. Respect what state revenue officials have to do. They are tax collectors, but they can be partners in answering your questions and helping you think through how you're going to approach the whole issue of taxation and use of biodiesel. If it's cost effective for you, take advantage of state incentives that might apply to biodiesel production and use. But study the details of the incentives programs very closely. It may not pencil out for you. If you have nothing to report, report it anyway. States may require monthly or quarterly reports. You may not have produced or used any biodiesel in a certain reporting period, but stating that on a report, if it's required, ensures that there's no information gaps, nobody's left guessing. The take-home message from this rancher was, you may not have to pay taxes, but you should pay attention. One last point. The states and the IRS don't view biodiesel exactly the same way in terms of its on-farm use, production and use. IRS wants records and taxes on biodiesel for fuel that's been used on-road. They're not worried about documenting off-road or on-farm for farm purposes uses. However, many states tax all biodiesel upfront and then allow off-road users to apply for refunds. Just keep that in mind when working with state revenue officials and as you make your plans. And in closing, here's the IRS and Federation of Tax Administrators website again. Every farmer and rancher I interviewed said, if you don't get anything else right, keep good records. So, Leif, I'll turn it back over to you.
Thanks, Al. We have a few questions from our audience. The first question here is, when does blending farm or ranch-produced biodiesel become a tax issue for the producer of that fuel? Would any of you like to take that question?
I guess I can take that.
Sure.
It's taxable upon the generally. I mean, when you blend it and then you're ready to stick it in the vehicle, it's taxable before you stick it in the vehicle. So I mean, you need to be aware of that before. It's not just after you've burned it you need to go back and pay taxes. You need to look at it early on in the process.
Mm-hmm.
Okay.
Yeah, one other thing I would add is that IRS has essentially no thresholds up or lower as it relates to tax policy, but they're pretty clear that they don't consider you a commercial blender and subject to having to pay taxes for on-farm, for farm purpose use of fuel until you go over that 400 gallon per quarter limit.
All right. Here's another question. If I'm a farmer who makes biodiesel but doesn't sell it, do I owe excise tax on that fuel I use?
Well, I'll take a first stab at it. Only if they put it in a vehicle that's going to be used on road. At the federal level, they may have to pay in their state tax and then show documentation that it was not used on road to get a refund.
All right, thank you. Our next question from the audience is, can you talk more about the producer's tax credit, not the blender's credit? Who is eligible and what are the details of that producer's tax credit?
Sure, I can talk a bit about that one right there. The producer's tax credit, it's basically for every pure unblended gallon of biodiesel you produce, you would be eligible for $1 per gallon on this. As I said earlier, currently the tax credits expired as of January 1st. So right now there is no tax credits. I mean, that's something that's important to remember. And we don't know whether they will change anything when they re-up the biodiesel tax credit. From what I've seen, currently they're just looking at reinstating it. But so if they do that, it's just for every gallon of pure unblended biodiesel you produce, it's straight up $1 per gallon.
Great, thank you. Here's a question from one of our audience members, and I read, Al said that a registration form was needed, along with the EPA and National Biodiesel Board registration if you sell any biodiesel. But it's my understanding that the IRS exempts biodiesel that is used or sold only for farm, off-road, heating fuel, etc. Which one of these is correct? Al, you might want to tackle this one.
Well, I might need some help from the tax lawyers here. IRS is pretty clear that if you sell, trade, or commercially exchange, if you exchange, trade, or sell biodiesel to the public, you have to be paying attention and probably pay the tax. I guess if you knew that your source was using it for on-farm use, maybe that would change. But they do. If biodiesel is produced on farm and used on that farm for farming purposes only, then none of this tax and paperwork really need apply. But when this becomes a publicly traded or distributed commodity, I think persons on the hook for a little more, and there's some reasons for that. Again, although much of this is geared for large-scale producers, the intent is any sold, traded, or otherwise distributed fuel has to be uniform and of high quality, and that's where where this becomes a sticky wicket. So if it's produced on farm and used on that farm for farming purposes, the paperwork and costs that go with all that paperwork wouldn't necessarily apply. But you start trading it, it's another issue. Rusty, anything that you'd add on that?
No, that's what I would say. It's almost like, say you're growing food in a garden. If you grow the food in the garden, you consume the food yourself, that's not a taxable event. It's when you take it out and try to sell it, trade it, barter it, that's when you have the taxable event arise, and that's when the IRS becomes very interested in what you're doing.
All right, thank you. Here's another question. Is straight vegetable oil treated any differently than biodiesel when it comes to fuel excise taxes or incentives?
I'll take a first stab at that. EPA does not recognize straight vegetable oil as a fuel. They only recognize biodiesel that is produced to that ASTM standard we've been talking about. But in terms of taxation, if a person has properly retrofitted their diesel engine so that it can burn straight vegetable oil, IRS will expect to collect tax.
We might have lost you, Al. Maybe he'll rejoin in just a moment. Rusty, Shannon, are you still with us?
Yes, it was cutting out a little bit, but yeah.
Okay. We'll move on to the next question here. What are some of the costs and paperwork I need to be ready for if I file a Form 637? Do you guys have that off the top of your head?
Well, the first thing, if a person's going to go that route, there's a few things that they should do. First, go to the National Biodiesel Board website and study all that you can on this topic, and consider joining as a small producer, which is $2,500 a year. The National Biodiesel Board then provides some assistance with their prior testing that meets EPA certification, and provides some cover as a person is then considering applying. Where it becomes a little more sticky is there are still 2 more forms that you have to apply to EPA. So one thing that I would suggest the viewers and listeners of this webinar do is go to EPA's website and see if you can download the document called Guidance for Biodiesel Producers and Biodiesel Blenders and Users. And if folks want to call the ATTRA website or go to the ATTRA website and leave a question, we can give you the specific website address so you can get that. But it's, boy, and then ASTM testing, the price I heard quoted for the full spectrum test a couple of years ago was $1,500 per test. Now that price may have gone up or down, I don't know, but we're talking about a fair amount of money and paperwork that a person's got to be ready for if they're going to enter that realm.
All right, great, thank you. The next question here is, how are the excise tax laws enforced?
Okay, it depends upon the type of fuel. With your traditional diesels, you will generally have DOT checkpoints in the state. In Oklahoma, we see these typically around the time of wheat harvest. They'll come out and they start testing all the trucks going up and down the road to see if they've got the tax-exempt diesel in them. With your biodiesels, there's no requirement that you dye these particular fuels to show that they're tax-exempt. It's only on record keeping. How you're going to get caught typically in this situation is a neighbor or someone that you have angered in the past may drop a hint to the IRS that there may be some tax issues going on. So a lot of this stuff, it's you get turned in by somebody.
All right, here's our final question, and the question is, how do I find a current biodiesel producer to provide advice or mentorship for my farm? Any advice that you guys have for that?
Well, I would suggest that the viewer contact ATTRA directly to broadcast a list of names over the web here without getting an opportunity to talk with any of these people who have experience in this area probably wouldn't be fair to anybody involved. So I would suggest perhaps contacting ATTRA, and then we, depending on where that person is, we could do some research to get them in touch with somebody who may be willing to share their experiences not too far away.
All right. Well, that about wraps up the time we have for questions. Would any of you, anything, Al, Rusty, Shannon, that you'd like to close with, or feel free to mention it.
I'd like to mention that we have some resources available on the National Agricultural Law Center's website that details where you can find each of the state's biofuels laws and as well the federal laws. I think we have a link on one of the slides before this one that provides that information. So also, if you have any questions, you can feel free to contact us. We can't provide legal advice, but we do provide information and resources, and so we'd be more than happy to help anyone out in that regard.
I've got one particular piece of advice. The stuff we're talking about today, we're hitting it at, we're viewing it from 30,000 feet. We're not really getting into the nitty-gritty details of this. Some of this stuff is fairly complex, and you're going to need help on this, whether you're asking a local attorney or you're asking one of us or you're asking the state excise tax agent. What I would suggest, sit down, think about what questions you have to ask, what issues you need addressed, then submit it to those people, but don't expect an answer right away. If you're talking to your excise tax agent in that state and you say, okay, this is what I'm doing, tell me what I need to do right now, he's probably, to be safe, he's going to give you the most stringent things that you need to do. And because of that, I mean, he might tell you to do more things than you actually need to do just because they don't have time to go and look it up. So whenever you do this, give them a bit of time, let them look it up, and let them get back to you with the best possible answer.
One thing I would add, I understand that on the question related to straight vegetable oil versus biodiesel and if they're treated differently, the signal broke up a bit. I would just like to mention that for purposes of taxation, the IRS does not treat straight vegetable oil burned in a diesel vehicle any different than they would biodiesel used on road. It may vary from state to state. EPA does not recognize straight vegetable oil yet as a fuel, but that does not mean it won't be taxed for on-road use. That's all I have to say.
All right. Well, thank you all three for your presentations today. For our audience, this third webinar in a series of 3 webinars will be archived so that you may listen to it again at www.attra.ncat.org. Also, if we were not able to address your question in the Q&A, feel free to give us a call on our toll-free number or contact one of our technical specialists about biodiesel taxation and incentives. You may also visit the National Agricultural Law Center website on the screen. As a reminder, immediately following this webinar, please take a minute to complete the survey and tell us what you thought of today's presentation. Your feedback on today's topics will help us create future webinars that are valuable to you. On behalf of NCAT, ATTRA, and the National Agricultural Law Center, I want to thank our audience for joining this webinar today. Have a great day and goodbye.